Hello, traders, and welcome to Traderland. My name's Des Woodruff here at Grok Trade. And it is Thursday, April 7th, 2011, and the markets are down ever so slightly. Not too bad, but the Russells did drop 0.5%. Banks did worse, and my eye is on that. We have the banks down 0.75%. Gold up past 14.70 an ounce, gang. But check this out. Gas prices soaring. Right now, crude above $110. Here we are looking at the S&P daily, major run up. We have this trend line that goes back a ways. Let me show you this. It goes back support, support. You can pause the video and draw in these same lines if you want to. Come up, 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 resistance, bust through it, came down. At one point today, we come crashing down below that, but we rallied back. If you look at just the bodies, we're kind of converging right here at this high. So we're making this high base. I drew a couple lines here. We have a line at 1340 that I'm watching very close, and a line here at around 1328 area. So 1328 and 1340 is my box that I'm watching. Now, I know that we'll be in semi-trouble if we go below 1332. It's this line coming across here. Resistance, resistance, resistance. As long as the bodies stay above this, if we drop below that, I'll be watching this trend line and this little purple line that I've drawn in. If we close below that, we're in a lot of trouble. At least look for some sort of down leg to commence. Now, I think the rest of the week we're just going to chop around here. Why? People are waiting until next week, the kickoff to the earnings season, and I think volatility that we're seeing now will only increase, and we will see either a breakout or a breakdown from this area. I will be watching volume because I'm looking for that conviction or that worth of the move up or down. So that'd be important to me for all you option traders out there. The volatility is probably starting to creep up. So make sure if you're buying calls or option or calls or puts, make sure your implied volatility is very low or in suitable areas so you're not getting hammered on the premium when you make your purchase. So don't let implied volatility get away from you. Now, you know what? I'll share this. Let me pull this up. Where are you? Here it is. Remember, I got some feedback from the on Facebook and private messages and in the chat room, but there's some discussions going on about brokers, and I did a broker rant yesterday just because there's a local mutual fund or fund here in town where I live, and very successful. They've been doing this a long time, have a gazillion dollars, and we have mutual friends. We were put together, and I said, hey, I'll throw my hat over the fence and I will help this fund get to a whole new level, because right now it's lagging the broad markets horribly. Look at this. What I'm showing you now is we're looking at the growth fund. I scratched out their name, but the S&P 500 and the NASDAQ are these lines. The dark line down here is the growth fund. It's this one. But I went back 3 years. We start all at zero, and look at this, how the growth fund has lagged horribly the other indices out there in the market. The further out we go, the more they lag. So what smart, intelligent, logical individual, investor, or trader would want to possibly be in a mutual fund that does this? Not me. Man, and it just kills me. I had another, he's a friend of mine. I have a big trading club here, and he was one of the founding groupies who came into our trading club, and he's got a couple million, and just came to me asking if I would trade it. Now, the rule of thumb is I don't trade for others. I trade for myself, even though, I kick myself time and time again that I don't have my own fund, but he was saying that he's getting ready to put it with somebody, but because he's not comfortable with trading it himself. He's older, and I don't blame him, but he is now paying 1% a year to a broker. And it just kills me to see that. So he's paying $20,000 to the broker to do nothing, to put him in a fund that's going to lag the broad markets like we see down here. I mean, are you kidding me? I mean, look at this difference. Right here, we're negative 20, positive 20. There's a 40% difference between that and the NASDAQ. Man, you could have just jumped into the Qs. If you would have just jumped into the Qs, you would have been keeping up with, the broad markets at least, and definitely smash in the mouth of all the other mutual funds out there. And this is why there's an exodus taking place in mutual funds. Nobody in their right mind wants to be in them. They want to be in ETFs. I mean, duh, of course, that's what you want to do. But, I'm not a financial advisor. I'm an educator, and that's for all you lawyers out there listening. So it's not for me to tell anybody what they should or should not buy or sell. But man, I'll tell you, just look at the charts. That'll speak for itself. I just think every mutual fund out there, every financial advisor out there, and all you brokers out there you have a fiscal, if not moral responsibility to learn how to actively manage your clients' accounts. So learn technicals, incorporate that with the great skill sets that you've been taught in school about money management, solid companies, looking at the fundies. Just incorporate technical analysis. So in 2008, when bad things happen, like major crashes, I mean, look at this. In just a short amount of time, you had, over a 65% drop of an account. That's horrible. If you just lose 50%, you have to make back 100% just to get back to break even. So anyway, I'm rambling again. That's not my point. But it is all in education. Hey, we have a mentorship coming up, and we have another one coming up in May. If you're remotely interested, just talk to Carolina, like North or South Carolina, Carolina at groktrade.com. She's a former student. She can answer any questions about the program. Take care and safe trading to you.